Good morning, ladies and gentlemen. How are you guys doing today? How's everyone feeling? Compared to what? Compared to the guy that couldn't get out of bed and make money with this amazing software, Ron. How's that? Good morning, GWC. Good morning, Jeffrey Dean. Good to see you guys. Jay, nice to have you back. Whew, man, it is News Central. I love it, Ron. Hopefully all of you East Coast folks aren't in any danger from the hurricane. I know, just a little update, my brother and them, it is supposed to go north of them. It's funny, there's an old legend that the Native Americans that lived and founded Sarasota in that area, they made a deal with the weather gods, and Sarasota has never been hit directly with a hurricane. That's the superstition. Kind of cool. And it seems to be holding true again today. So, good stuff. Good morning, Ed and Izzy and Jen and Steve. Nice to have you guys here. Guys, a lot of news going on today. Today is Thursday, September 26th. Every morning I check news. Every morning I make the choice not to trade directly into news. And when you look at today, guys, there's a lot going on with the FOMC. And I watch NASDAQ primarily, and it's been range bound for most of the day, just bouncing in between key areas. Thank goodness I had those key areas on my chart. At 9:15, Bowman speaks. At 9:10, Collins and Kugler speak. At 9:20, Powell speaks, guys, and that's the one that could bump it. That's the one that can make things go a little crazy, really shake it loose. And then at 10 a.m., we do have pending home sales, which is medium impact. And then at 11:15, Treasury Secretary Yellen speaks. Guys, this is a big news day. And one of the things that happens when news releases very often is the market really goes a little sideways, really, really fast, quick spikes. That bounces off of areas, but it does it so quickly you just can't seem to grab hold. So a lot of people choose not to trade into, hey, good morning, Andy. A lot of people choose not to trade when there's news. Good morning, Erla. Because it just becomes a little unpredictable. So every morning, this is my first stop with you guys, checking forexfactory.com. And then every morning I head over to the Nexgen T3.com page and I click on the trading guide and I remind you guys that this is where the answers are. Everything that I talk about comes from this trading guide, and I say it each day and I'm going to say it again today. There are no secrets with Nexgen. We don't hold back on you guys. We give you really everything that you need to be successful with the software. My promise to you is that by the time you walk out of here today, if you make it through the whole class, you will have everything that you need to understand the software, to look at it. And the only thing that you'll have to really apply is a little bit of effort to learn it. So I'll do my part this morning. You do your part this morning. We'll get exactly where we want to be. And every morning, guys, when I go to the glossary common terms here, we're going to talk about one trade, specifically the high probability trend trade. This is a trade, and let me go ahead and throw it out there. This trade may only happen 2, 3, 4 times a day. This is not the only trade that we teach, but this is your first trade, guys. The high probability trend trade is defined when each indicator on every chart agrees with the rules for the trade, guys. You are just a boatload of advantages. Triggers are their strongest. No termination conditions exist. There's no trouble spots between your entry and your target. Guys, this high probability trend trade, when executed properly, is a trade that typically wins 70 to 80% of the time. That win percentage creates confidence through the memory of success. But the most important thing that the high probability trend trade does, guys, is it teaches you to read your indicators. It teaches you to look at your charts and just understand if you have the advantages that you need to take a trade. Chart reading, looking at the indicators, listening to the indicators, guys. This is 90% of your day, every day. Trading is, I hate to say it, it's boring. It's not exciting, guys. If you really need excitement in your life, Go jump out of a perfectly good airplane, right? Go swim with sharks. Go tell your wife the jeans make her look fat. Whatever you need to do to get that adrenaline up. Let trading be your business, guys. And sometimes in business you have to be patient. But when you are good at chart reading, when you can look at it, guys, don't do that. Yeah, Jen, you're probably right there. 90% of your day is waiting, 10% is trading, guys. We're professional traders. But when you master that part of it, when you get good at these chart reads, you're going to understand where the market is likely to continue. This becomes your entry point for the highest probability trend trade initially. You're going to understand where the market is likely to go. You hear me in class very often when we give chart feedback. Guys, you had a big blue line off in the distance. Get paid at it. You had a giant red line off in the distance. It's okay to get paid at it. You're going to understand exactly where the market is likely to go. And then you're going to have a recipe to understand where the market is likely to stop, where your trend may end, where big untradeable bounces can happen, guys. And if you keep it very, very simple for your first 20, 30 days, what you're going to find is that this becomes very easy for you. And once you can understand a few advantages, doors open. So this high probability trend trade is 3 rules. That's it. And I promise you, you're going to try your hardest to change the rules around, to add things to the rules, to create your own opinion about what it means to have them met. Keep it very black and white in the beginning, guys. Each rule gives an advantage, and this is your chart reading coming into play. Rule number 1 says that you must have strong triggers, and this is going to provide you the advantage of momentum. And momentum pushes the market in the direction of the trend. Momentum can break key Fibonacci areas, and momentum can cover mistakes that we typically make as new users. Once you have momentum, you're going to look for a clear path. You're going to make sure that you have room to your profit targets. We do this by making sure that we're not trading into any of those likely to stop areas. So momentum gets coupled with a clear path. And guys, once you have these two, your first entry area, your first rule number 3, is going to be the entry for the highest probability trend trade. But I made this morning, guys, and it's the same picture. Once you understand momentum and a path, once you can put those two together, you're going to see more entries, you're going to recognize more patterns, guys, and you're going to see way more opportunities. Let them be your focus initially. Learn these 2 very basic concepts. Learn how to recognize them, and more importantly, learn how to trust the advantages that they give or the ones that they take away. And then your entry area, your rule number 3, is going to change all the time. You're going to find entries on that high probability trend trade. You're going to find entries on momentum style trades, on high volume area trades. You're going to be able to take medium probability trend trades. But it's all going to be dependent on your ability to read your chart. So we keep it very simple and focused in the beginning. Only 3 rules, and we let it happen on 2 charts. There's a large chart and a small chart. That's the easiest way to put it, because it doesn't matter what the numbers are. There's a big number and a small number, a big chart and a small chart, guys. The large chart on the most current bar, I've got my laser pointer over the most current bar. It will define the direction of the market. And it'll do that through the background color. It will define the momentum of the market using these trigger lines, and that's where rule number 1 has you recognizing that advantage. And it will define the areas that may be problematic. Termination conditions, those likely to stop areas, are going to be on your large chart, and you will see them long before you ever get to them. And I'll give you a recipe to understand when you need to hit the brakes. Once you have momentum, once you have a clear path, we're going to go to a smaller, faster chart. This is a refinement chart. Inside of this 1 bar is typically 20 to 30 bars worth of information. You're going to see that on the small chart. This is going to refine that very broad stroke of a brush, and it's going to pinpoint exactly where the market is most likely to continue, guys. This becomes your entry for the highest probability trend trade. Your small chart is an entry chart. Ultimately, it will become a management chart as well. But our only focus for the first hour is pinpointing, using the small chart, exactly where the market is most likely to continue. because we have the rules met on the large chart. And we do this because the large chart is a large crowd, and you're going to hear me say that. What does the large crowd want to have happen? What are the people with the money, the influence, the charm and grace? Where are they taking the market? These guys are going to establish the trend. You see that on the large chart. They're going to create the momentum. You see that on the large chart, and they are going to react at these key areas. Once again, the large crowd is the large chart. Trading with it is the path of least resistance. The small chart is like this small crowd. These guys have money. There's no doubt about it. Their uncle left them a big old pile of money, and they have the power to create these little pushbacks, these retracements against the large crowd. We love the small crowd because these guys fail 70 to 80% of the time. They're not able to change the trend completely. And guys, you're going to be able to pinpoint exactly where the small crowd is most likely to fail. This will be your entry for the highest probability trend trade after the large crowd picks the direction, the momentum, and avoids the areas. So we're going to keep it, just focused today. Guys, learn the trigger line and the Fibonacci rules for when it's okay to trade. More specifically, really commit yourself to learning those first two rules, the advantage of momentum and clear path. Simulate, practice. I see new names in here, but I'm not seeing pictures from you. And guys, I don't mind calling you out, right? Frank Kirsch, I'm not seeing pictures from you. Jay, where are they, man? There's a lot of you in here that I know that are in the learning process. George, guys, you've got to take pictures. Practice and post. Practice and post. This class is a discussion. It's not a lecture. And every time you take a trade, every time you don't understand what you're seeing on your charts, I want you to post in the room, guys. And I want you to do it and always go back to the three things that we teach each and every morning. Look at a chart and talk about momentum. Is it strong? Is it weak? Post it in the room. Let's talk about it if you need help. Did you have a clear path, or were you trading into one of those areas? And if you're not sure, post it in the room. Talk about it. Let's get a lesson. Same thing with entries, guys. And the people that post the most are the people that get to where they want to be. The people that don't hide losers are the people that get to where they want to be the fastest. We're going to simplify. We're going to talk about that high probability trend trade extensively. Your ability to understand those three rules, those three advantages, guys, it's going to open the door for so many trades. But you've got to get good at those first. You've got to learn the looks so that they become easy, so that you can recognize them in a moment. And it almost slows down the market. So to get to where you want to be, ASAP, guys, this is tried and true. Post in the room. Post in the class. Everything. Joel did it. Joel said, hey, check it out, Mark. Let me show you what I did. I've got odds favorable momentum. The triggers are open like scissors. And Joel says, when I've got the potential to break this area, I'm going to find an entry from the correct side. I'm not going to trade into these areas because they create bounces. I'm going to trade from the areas, Mark. And I'm going to get the hell out of trouble. And Joel, perfect trade. And guys, the great thing is if Joel made a mistake, if Joel read it wrong, if Joel didn't do something the way Joel was supposed to do it, we would see it, we would talk about it, we would analyze it, and we would find a way together to do it better. Feedback makes things happen in this room, guys. The second is use your spreadsheet, the same one that I give you every day. If you look in your Nexgen study picks folder, you'll see this very spreadsheet. Mine gets updated a lot throughout the weeks. So I drop mine in the room every day. The first tab is a trade journal. That's all it is. I did this. These were my advantages. Here's what happened. But most importantly, this is what Mark said about it. Mark said I might have jumped in a little early or stayed in a little too long. Mark said I was fighting triggers or trading in determination conditions. And what happens is you take the picture. Here's how to post it in your spreadsheet. And it's annotated. And then, guys, you come back and study it. And that's the forgotten part. Every morning, I go back and look at what I did yesterday, guys. Every morning. I do it when I have great days, and I do it when I make some mistakes. And what happens is every morning I ask myself what worked. What was working for me? What was bringing me success? And then I ask myself what didn't work. And, guys, what happens is if you ask yourself these questions, you're going to understand exactly what's bringing you success and what may be holding you back from that success. And if you're not sure about the patterns that are working for you or against you, guys, post in the room. Because one of the things that I have, and it's annoying as hell to my wife, is I recognize patterns in people. And it takes me 4 or 5 of your posts before I start understanding where you're having challenges. And my brain starts spinning and we find a way to fix them, guys. So go through this every day. Accelerate the learning process. Take 1,000,000 pictures so that it becomes easy. The 101 tab on your spreadsheet is each rule broken down individually. Because it's one thing to look for a trade. It's an easier thing to look for 3 advantages and turn those advantages into a trade. It's difficult to lose 50 pounds. It's effortless to lose a pound a week. So guys, break it down, understand them individually, and you will create a trade with it. That's what the green section is. And I've done a lot of work for you on this spreadsheet so that you can study. And then the red sections are what it looks like to not have the rules met. And I think one of the greatest pictures that you can take, especially as a brand new user, is pictures of when the rules aren't met, when those advantages are gone, because it's equally important to understand having it, and maybe even more important to know when it's not present, because 90% of your day is doing nothing when there's nothing to do, guys. The third tab is where you're just going to build your trading plan. It's a picture lot for you to build the trading plan based on your ability reading the indicators. And then guys, this is where I have liberated pictures from you guys in the room. When you guys throw a picture in the room and I'm like, egads and little fishes, this fits every rule. This is a great looking trade. This is the kind of trade that people could learn from. Guys, I steal it. And there's like 480 pictures of you guys being smart in this spreadsheet. There's the high probability trend trade entry sequence, going long and short. There's management ideas. This one's very basic. I teach this in the very beginning of class. But guys, everything that you do when you grow with the software, there's more opportunity. You'll begin to recognize patterns that are going to bring you a different level of success. So you start taking pictures of those patterns as you recognize them. And guys, don't skip the termination section, because that is the most broken rule when we talk about rules. So we're going to get going. We're going to talk about 3 rules. That's it. If you have a question about one of the rules as I discuss it, I need you to post it in the room so that I can clarify for you. Once we talk about these 3 rules, I'm going to give you guys everything that you need to study. I'm going to give you everything that you need to be successful. And the only thing we're going to do from there is just have a conversation for the next 2 hours to make sure that you understand the concepts. And remember, there's only 3. And more importantly, there's 2 that lead the way. And it all starts with strong triggers, guys. Large chart needs strong trigger lines. It doesn't want them, it needs them. This is a must-have so that we can have momentum, guys. And if your large chart background is green, the market is trending up. There's the easiest lesson that you'll ever get. Green means up, red means down. Pretty cool, right? And the only way that you can have strong triggers is if the colors of the triggers, small or 2 solid lines, large or dashed, these have to match the color of the background. If they don't, you don't have strong triggers. If they don't match one another, you don't have strong triggers, guys. So when the background is green, the small triggers are green. When the background is green, the large triggers are green. And strong triggers means that the small triggers are up and above the large triggers, space. The large triggers are widening. Flat triggers have no boogie, someone said in the room once. I love that. And this separation between the small and the large lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, guys. I say it till I'm blue in the face every day. Background is red. Small triggers are red. Large triggers are red. The space between the small and large lets me know that the odds are favorable for the market to continue down. Guys, odds favorable momentum leads the way. It pushes the market. It breaks areas. It covers mistakes. Odds favorable momentum, guys. This is the one that I don't want to do without. And then when the small triggers come back to the large triggers, this is a weakening of the large triggers. Flat triggers don't boogie. Was that Andy that said that? I love that phrase. That thing has been rattling around in my head for months. Strength is separation. Once that separation is gone, the strength is gone. And when the strength is gone, so is the advantage, guys. And I say it a lot, and I'm going to say it one more time here. I firmly believe that language is important. And if you start associating this look, using words like strong, like odds favorable, it keeps you focused on the best of the best. And every time you see this look, if you say something like weak or anything can happen, guys, it really sets you up and it makes you feel like I have this advantage. I need to embrace this advantage. This is what it looks like when it's time for me to take a trade. And guys, that really is the rule number one lesson. And let's take a look. Strong triggers. Look at all the strength that breaks areas. And then they begin to weaken and we get a big retracement. Strength pushes up and continues up. Strength pushes down, breaks areas. As we weaken, the market seems to retrace. Kind of cool, right? You guys can see this. You don't have to be in a trade to recognize this look. All you really have to do is believe that when I have momentum, that first advantage is there. And then we're going to take that momentum and we're going to make sure that there's nothing in the way, guys. Momentum, you are in a smart car, and that smart car is zinging. We have to make sure that there's no areas likely to stop the market in the way. We have to make sure that there are no termination conditions, guys. This is going to give us room to our profit targets, and when we have room to our profit targets, we're going to call it a clear path. So momentum leads the way, and I'm going to ask you guys real quick, is everybody cool on momentum? It's really pretty simple. Separation is strength. When they come back together, it's weakness. If you're brand new, give me a Y, because if you need help, I want to help. Once I have momentum, I love it when you guys don't play along. I'm going to make sure that I have a clear path, guys. Lines on a large chart. Lines on a large chart. Andy, it's brilliant. Just take credit. Because we all want to give it to you. Horizontal lines on a large chart can stop the market. Horizontal lines on a large chart are where the large crowd are making decisions, where the buyers are buying, where the sellers are selling, where fights can happen, guys. I've given you the picture in the room. You're also going to get this picture from my PowerPoint. But these are the areas on the large chart that can stop the market, that can create untradeable bounces, that can really keep you from going the direction of the trend, guys. Divergence, highs, and lows. Divergence is Nexgen's verbiage here. And it says that there is a loss of momentum at a pivot. If the market goes up and comes back down, there's calculations running in the background. If they say, hey, guess what? You're losing momentum. You're going to see this magenta line print from a high. You will see a negative number print just above the pivot. If you don't get this line, if this doesn't print and stop moving, you don't have divergence. It's nothing more than potential. Market goes down, goes up. If there's a loss of momentum, you're going to see this cyan line, this light blue line, guys. These lines, when the market reaches them, can stop it cold. Fibonacci resistance, these red fibs, guys, these are on your large chart. These are the areas. These can stop the market. These can create a bounce. These can reverse the market completely. Fibonacci support. Yellow 1-to-1s, guys. All we're looking for is horizontal lines on the large chart. Good morning, Miss Cindy. Nice to see you. So we are going to go through a simple process to understand when you've reached a termination condition. Everything begins with price reaching the area. If we are anticipating a reaction out of the large crowd, if we are avoiding the reaction out of the large crowd, we're going to let price get to the area. We're going to let the dynamic Renko bars trade all the way up to resistance, and we're going to let them trade all the way down to support, guys. And when they get there, the decision-making process kicks off. Until you get there, these might be targets. Price reaching the area is the first step in a termination condition. Once price reaches resistance, magenta high line, magenta divergence line, yellow 1-to-1s, red Fibonacci resistance. Once price reaches support, blue Fibonacci support, cyan divergence low, yellow 1-to-1s. The only thing that you have to do is ask yourself, where are my triggers? And if they remain below resistance, resistance is a termination condition. It's an area that may stop the market. It's an area that may create an untradeable bounce or even a fight that lasts for a while. No trades into the area, guys. Rule number 2 is not met and your path is not clear. You need to begin to look at these lines like brick walls, and they can mess up your fun. Price reaches support. Where are my triggers? My triggers remain above the area of support. This area of support may stop the market, may reverse the market, may create an untradeable bounce. No trading into lines on the large chart. It really is that simple, guys. And rule number 2 is designed to keep you safe. And one of the things is if this resistance reverses the market, makes the large triggers go from green to red, price comes up, triggers remain below, and it reverses the market, this is a strong top. And a strong top is the precursor to the highest probability trend trade short that you can take. And if price reaches support and the triggers remain above and it reverses the market, this is the precursor. This strong bottom sets you up for the highest probability trend trade long that you could ever take, guys. And the market stops at these lines often. Yellow 1-to-1s stopped at cold right here. Do you guys see it? Divergence high line, triggers didn't break. Look at the bounce. And then it did it again. Look at the bounce. And then finally the momentum breaks it. Big move down. Price pulls back to resistance on a retracement. Can't get through. Sellers continue. Happens again right here. Big bounce off the 1-to-1s. Triggers don't get below support and it keeps heading up, guys. Over and over and over. Can you guys give me a why? If you see right here that price reached yellow 1-to-1s, the triggers remained above, and this was the beginning of the reversal. Ladies and gentlemen, this is why we have rule number 2. Rule number 2 shows you where the market is likely to go. Rule number 2 shows you where the market has the potential to stop. Guys, rule number 2 is going to bore the hell out of you because rule number 2 stops the market sometimes, and it means that you can't trade. You have to wait for that clear path. Well, the clear path happens when both the small triggers, both lines of the small triggers, and both lines of the large triggers get below Fibonacci support. Now Fibonacci support is broken, it will behave as resistance. When both the small and the large get above resistance, the area is broken, it behaves as support. And guys, let me do something real quick because this is important. I'm going to change those red and blue lines to one solid white line, and it doesn't change a thing on whether or not the area is broken. It has nothing to do with the colors of Fibonacci, guys. If price reaches resistance and the triggers remain above, sit on your hands, it's a termination condition. If price reaches resistance and the triggers remain below, sit on your hands because you don't know what the reaction is going to be. You don't know if it's going to break. You don't know if it's going to reverse. But once those small and large get below, guys, once they get above, go cat go. We have a clear path, and that path remains clear until the next area is hit. So can you guys give me a why if you're with me? Let's see if we can find a real world example. We'll use this blue Fibonacci, guys. When price reaches it, pause. Once small and large clear, look how it behaves as resistance. You knew about this line. Holy smokes. All the way from back there, guys, you knew exactly that this could be an impactful area. Look at the big spike on your large chart right at the fib. Look at the big spike right at the divergence low. Look at the big bounce right off the area. Guys, you now know where the market is likely to stop. You now know where the market is likely to go. And once you take this lesson and you allow it to be very basic, it either is or is not, it sets you up for the second trade that I'm going to give you a plan for. Because sometimes your small triggers absolutely smash through an area. 50% of them break through that area. But 50% of them lag behind. The large triggers have remained above, guys. This 50 below, 50 above, 50-50. Pretty cool, right? Easy. What does 50-50 mean? It means that as long as I have odds favorable momentum, because odds favorable momentum can break areas. As long as I have odds favorable momentum, this area has the potential to break. So I have to pause and make sure that because it's only potential, I'm not sacrificing momentum, making sure that I have a low risk entry. But you will be able to capitalize on this 50-50 look, guys, but it will never be a high probability trend trade because potential is not a clear path. And I will give you a plan for this one. This will be your second trade. But it's going to be important that you understand terminations, price reaches, no triggers, no trade, and that you understand smalls and large above are what give us a broken path, a broken area, a clear path, so that you can incorporate the lesson from rule number 1, odds favorable momentum, and that 50-50 look to gauge the potential. Everybody cool? Guys, this is rule 1 and 2, and once you figure these two out, the world is your oyster. It will create a level of patience. It will inspire you to see more, and it's going to help you manage, and it's really going to open doors, guys. But sometimes there will be times when your path is not clear because the areas are stacked a little bit. Has anyone ever looked at their chart and said, son of a gun, I can't get a clear path? It's fib after divergence, and every time I think it's going to break, I hit another line. Guys, this is okay. This is 90% of your day. Each and every one of these Fibonacci indicators, each and every one of these horizontal lines is really a result of past emotion in the market, guys. It's taken from swings, up and downs, place where decisions were made. And decisions may be made there again. And it's okay to sit on your hand 90% of the day, guys. And the futures market trades billions. Billions every day. You have to make 400 of it to hit 6 figures, guys. How cool is that? You have to make 400 of it to get into a 6-figure income. So rule number 2 shows you where the driving forces of the market are likely to make decisions. And very often, rule number 2 will keep you out of consolidation. It'll keep you out of chop. 90% of your day is spent waiting on these indicators to give you the advantages. 10% will be trading. And guys, here's a picture my brother sent me this morning from the NASDAQ. Rule number 2, not met, 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 not met. Guys, rule number 2 defined consolidation in the NASDAQ market. Rule number 2 kept you from taking longs when longs weren't probable to win. And rule number 2 kept you from trading into areas that weren't broken. You see it all the time. We've seen it today. We've seen it this week, guys. So that's our first 2 rules. Momentum leads the way, guys. Momentum is, there are plans built only on momentum. When you couple it with a clear path, you are behind the wheel of a big semi-trailer truck. You're doing 100 miles an hour through the desert, and there is nothing in the way. Momentum and a clear path, guys. This is all you need to build a solid plan. But we're going to add an entry area. We're going to first figure out how to pinpoint where the market is most likely to continue. And guys, this lesson is equally important for getting you into the market, but for giving you a solid understanding of the first management principles. So rule number 3 is on the small chart. Rule number 3, you're going to use a limit order. You're going to actually be able to wait for the market to come to you, and you're going to wait at areas, fibs, mid-bands, and yellow 1-to-1s. And you're going to insist that those areas are inside of triggers, guys. This is the recipe for pinpointing exactly where the small crowd is likely to fail. So when you have momentum and a clear path and you turn your attention to the small chart, if you see 3 divergences have printed in the same price range on that small chart, rule number 2 isn't met. This is the only time that rule number 2 is not met on a small chart. When I have momentum, when I have a clear path, guys, wild horses couldn't drag me right out of that trade. But if I see 3 divergences, this is my small chart showing me change that I can't see on that slow chart. 1, 2, 3 at a low says no more shorts. 1, 2, 3 at a high says no more longs. The market may reverse. But if it's not there, we're going to use that rule number 3, and we're going to use a limit order to buy or sell a pullback, that little push that the small crowd creates. And we're going to have that limit order sitting at areas. And guys, this is where language becomes very important. Inside of triggers, and more specifically inside of favorable large triggers. Brand new users. This is the best of the best. This is the easiest of the easy to pinpoint. This is the one with the least amount of risk. Favorable large triggers means that your large triggers and your synthetic triggers are overlapping one on top of the other. Guys, one is not more important than the other. These large and synthetic triggers are where the price is likely to return. Price comes back to large triggers on the large chart. That's your synthetic triggers. Price comes back to the triggers on the small chart. That's your large triggers. When they're overlapping one on top of the other, guys, they're favorable. You have the least amount of room for fibs, midbands, and yellow 1-to-1s to be inside. This is going to help you define your smallest possible window of opportunity, the smallest area possible where the small crowd may fail, and this is where your entries come from. So, little visual. Small chart price may retrace back to the large triggers. I have 1-to-1s and a fib inside. Those may produce a bounce. Price may return to triggers, areas create a bounce. Synthetic and large chart. Synthetic, the large chart may return to these triggers. There's an area for a bounce in there, guys. So what we're doing is we're creating this window from the highest point of support to the lowest point of support, or for a short trade, from the lowest point of support to resistance to the highest point of resistance. This red box shows you the areas inside of triggers. This red box is pinpointing exactly where the market is most likely to bounce and continue, and you can see that it did, damn near to the tick there, guys. So we're going to focus on pinpointing where the market is most likely to continue, and once you guys can do this, you're set. So the large chart says up. The large chart says clear path. The large chart says go to your small chart and pinpoint an entry. And your small chart is going to be screaming to the upside. And your fear of missing out is going to kick in. Full tilt boogie, guys. And you're going to be like, oh my gosh, I'm never going to get paid because they won't come back for me. And then this magical reversal bar prints, guys. This red bar after all the green bars. And this reversal bar tells you the fight is on. This is the beginning of the pullback. Find those triggers, those favorable large triggers, one on top of the other. Looks like two snakes riding piggyback. And once you find those triggers, say to yourself, price bars may return to these triggers, but triggers don't create a bounce. They're not my entry. I need areas, fibs, mid-bands, and yellow 1-to-1s. And then here in all caps, ladies and gentlemen, inside of favorable large triggers. And this is going to define where the market is most likely to continue, where the bounce is most likely to happen. From the highest point of support, the mid-band, to the lowest point of support, yellow 1-to-1s, inside of favorable large triggers. This blue box is where I anticipate the market to bounce. But because the large chart is absolutely flying to the upside and there's nothing in the way, your limit order goes a couple ticks above that highest point of support. And once you activate that limit order, you've done everything that you can do. You have been in control of the only things you can ever be in control of, and that is assuring that your rules are met, guys. Any lines outside of the triggers, any lines beyond the triggers, on the wrong side of the triggers, this isn't where we expect price to return. We expect price to return to triggers. So anything beyond those triggers isn't where we want to be. And this is kind of going to be your first management lesson. Pinpointing where the market is most likely to continue allows you to understand where the market shouldn't go. For short trades, large chart says down, large chart says momentum, large chart has a clear path. Let's turn our attention to the small chart and panic because it's going without us. And then you take a deep breath and you say, it's cool. Patterns repeat themselves all the time. Let me wait for that reversal bar, that green bar after all of these red bars. And once that reversal bar prints, I'm going to remind myself that that is not my entry, but rather that starts the pullback. So I'm going to look for those triggers, large and synthetic, one on top of the other, two snakes riding piggyback. And I'm going to remind myself that the trigger lines are not my entry, but rather they are where I expect price to return. And then I have to search out for any lines within fibs, mid-bands, and yellow 1-to-1s. And my window of opportunity will extend from the lowest point of resistance to the highest point of resistance inside of favorable large triggers. And guys, there's only one line. There's only one option for the bounce. Your limit order goes 2 ticks below it because of the odds favorable momentum on the large chart, because of nothing in the way on the large chart. Guys, this is the part that you have to study. Because once you understand where the market is likely to continue, you understand where the market shouldn't go. And your initial stop placement will be 4 or 5 ticks beyond those trigger lines where the market shouldn't go. And if the market comes up and catches your stop, it is not a failure. What it is it's a cost of doing business, guys. We're trading patterns. We're trading patterns that have been proven to win more than they lose. We're trading patterns that are repeatable, that are studyable, that are verifiable. And anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. This is just a fact of life, guys. If the small crowd can push, we know when we need to get out. We don't leave stops $500 in the distance hoping that it just decides to go up. We say, you know what? My advantage is gone. I'm out of this trade. I'll wait for the next one. And then the great thing is, though, if you're following the rules, if you have that momentum, if the path is clear, if you've entered where the market is most likely to bounce, more often than not, you're going to get a reversal bar, guys. This reversal bar confirms movement in the direction of your trade. This reversal bar doesn't guarantee a win, but this will be your first stop movement. You can actually reduce your risk 2 ticks below that reversal bar for a long, 2 ticks above that reversal bar for a short. And it's not uncommon to see the market come down and then start back up, and you get excited and you've got virtually no risk because of your great entry, and then that stupid small crowd pushes it back down and you find yourself with a $30 or $40 loss instead of a $300 or $400 loss down here, wishing the market would do what your indicators are telling you it's not likely to do, guys. So focus on entries. Give me 20 days of understanding momentum. Give me 20 days of understanding a clear path. Give me 20 days of practicing, studying, and just chewing my ear off with questions about great entries. And then, guys, this is going to open doors for all sorts of stuff. My classroom is designed to teach you the best of the best in the beginning, to give you the highest chance of success, to optimize your chances of success, guys. And the easiest look is favorable large triggers. But, guys, this is not the look. I told you in the beginning of class, 2 to 3 times a day, maybe 4 to 5, depends on the day, you're going to have the best of the best. More often than not, your trigger lines are going to have a split to them. They're going to be separated a little bit. And this is where the lesson pays dividends, guys. If you understand that the price bars may return to the large triggers, but they may also return to the synthetic triggers, you're already saying to yourself, well, that's a little bit of indecision. I wonder which one it's going to go to. And then if you know that this line can create a bounce, but this line could as well, it creates a little indecision. And you know that your stop belongs below the trigger lines, that's a lot of risk. So one of the things that users can do is when your entry isn't perfect, guys, when those triggers are a little bit split, when there's a huge window and you're not willing to put that much risk on it, you can wait for that reversal bar, that confirmation bar, because what that does is it establishes risk 2 ticks below that bar, and it says the market's likely to continue up. I'm not sure where it's going to continue up from, so I will force it to continue up rather than just jump in and hope. And this doesn't guarantee a winner, but what it does is it establishes your risk. The market is pushing in the direction, and it gives you a better chance of not just getting run over if it goes to the lower areas. So I've added that to the lesson because you're going to find a lot of trades that look like that, guys, and that reversal bar will save bacon. But the most important thing that you guys can do is study. If you see strong triggers, right, if you see a clear path or the potential to break, first 2 rules met, and you see one of these tails on the chart, this tail is this pullback, guys. Circle the tail. And if on a smaller chart it pulls back to an area inside of triggers, guess what? You had a potential trade there. circle it, take the picture, annotate it, talk about the advantages. And if you're not sure if it was the right trade, drop it in the room. But that's actually going to be your study tool. And that's one of the ways that you can go back, and I love it, convince yourself that I'm full of crap. Tell yourself, you know what? There's no way this works. There's not enough rules. There's too much. No way. Don't believe it. And go circle one of those tails and then just, oh my gosh. Well, that divergence low had the potential to break, ladies and gentlemen. Do you see it? Odds favorable momentum, smalls below. This market had the potential to break that low area. And then it pulled right back to resistance, right inside of triggers. Price never got to the wrong side of triggers. Got a reversal bar, and sure enough, it went down. And I show this because I want you to study this, guys. I want you to go back and do this. I want you to do this drill, and I want you to be a little skeptical, and that's okay with me. It doesn't bug me at all, because if you go back and do the work, if you learn momentum, if you begin to understand path, and you literally go back and see this pattern, what you're going to find is that you'll be with me for the rest of your life, guys. It works. The only thing that you have to do is learn how to work it. So now I'm going to give you the tools that you need to do that. Are there any questions about the high probability trend trade, guys? Are there any of the individual concepts that I can help you with? And we're going to be here all day. We're going to be here till noon. The easiest way to get to where you want to be is you have to be able to recognize these looks and patterns quickly, guys. Taking trades is not the route to getting you to where you want to be the fastest, guys. Taking pictures will pay dividends. Taking pictures of strong triggers, of weak triggers, of clear paths, of termination conditions, burning these looks into your mind. But you've got to do more than just snap the picture, guys. You've got to talk about why. So I'm just going to pick a random one here. The annotation said strong down. Why? The smalls are below the large. All triggers in the background are red. This is strong triggers. This is odds favorable momentum. This is rule number 1 met. And this is where I want something to click in your brain right now. That if you go back and take 25 pictures of this look and you annotate it with the whys, you're going to create a connection visually and linguistically, I guess. And every time you see this look, these are the words that are going to rattle in your brain. This is odds favorable. This is rule number 1 met. And guys, the whole idea is that you go through and you do that for each of the conditions, understanding what it means to have them, what it means to not have them. The annotation is what's going to cement the lesson, because your brain, if you have to type it out, your brain's more likely to remember it. So learn them individually, and you will piece them together to create a trade. And as you go through this journey of taking pictures, guys, I'm going to give you the high probability trend trade checklist. And this is the checklist designed to help you enter the market, guys. Is the market coming from a strong top or bottom? You don't have to have a strong top or bottom, but it is the precursor for the highest probability trend trade ever, guys. And that is the termination. Price reaches, no triggers break. That reverses the market. It sets you up for the best of the best. Momentum either is or is not. Don't get caught up in between, guys. Momentum either is or it is not. It's either a termination or a clear path. And then eventually, you'll take advantage of that potential to break. And then finally, exactly what you're waiting for, what you're looking for, and where you're going to enter with those advantages, guys. So as you go back and take pictures, you've got a little cheat sheet, the Cliff Notes. And then the second tab, good morning, Wayne. The second tab is just a checklist to print out, to put on your desktop, to remind you what it is you're looking for. And I encourage you guys, use the language on the checklist when you annotate your charts. Use words like odds favorable. Use words like termination or clear path. Use especially this phrase, guys, inside of favorable large triggers. And I've never had anybody mark yes to everything on here and do worse than 70%. And if there's anybody in this room that isn't here because they want to make money, by all means avoid it if you're brand new. But if your goal is to be consistent, to have advantages, to win more than you lose, This is an awesome place for you to start. Print this out, put it on your desktop, use it for annotations. And then guys, once you get to this basic understanding, 2 or 3 days in, start practicing, get on the simulator. I'm giving you a plan. I'm giving you a plan to use as a brand new user. And this plan is a stepping stone in your learning journey. The high probability trend trade is not the only trade. There are a lot of trades out there, but this trade is your first trade. This plan is designed to optimize your chances of success with the high probability trend trade, guys. And then through simulation and study, class feedback, continuous practice, you will be empowered to craft a plan that is tailored to your personal goals based on your experience reading the indicators. That's that crazy AI telling you that once you can read your charts, you're going to see things. You're going to see opportunities. You're going to find different entries. You're even going to manage differently. But learn to read your indicators first, guys. And your simple plan for consistency, it has to begin. Don't fight the large chart, guys. Don't fight the triggers on the large chart. Don't trade into those termination conditions. If you can avoid those two things, you're better than 70-80% of the traders in the world, guys. Because when you do it, that's how to commit financial suicide. One of the worst things you can do, especially as a new user, is fight trend, is fight momentum, is trade into those areas. Does it mean that it's always a recipe? No, but for new users, it probably is. And then you'll see yahoos in this class that do it, but they do it because of their ability to read charts. They do it because they've taken the time to study. They do it because they have found patterns that may fight the trend, that win more than they lose, and they've incorporated them into their trading plans. So if you see it in the room, don't try to be like them. Understand that when you get to where you need to be, you'll probably see what they see, guys. But everything is about entries. Everything is about defining where the market is most likely to continue. Everything is about getting in at the best of the best spot. Because when you know where the market is most likely to continue, guys, when you know where that bounce is most likely to happen, when you understand exactly where your limit order goes, you know precisely where your stop goes. 4 to 5 ticks above those triggers, right where the market shouldn't go. And once you take this entry, especially because you're on simulator, guys, I want you to sit on your hands. I want you to roll away from your desk. And I want you to say, I've got 2 options in this moment. Either price is going to continue through everything and hit my stop. It's going to pull me out of the trade, but that's okay because I'm trading a pattern and small losses are a normal part of a positive equity curve. Or that magical thing's going to happen where the market gives you the reversal bar, where it says, hey, guess what, Veronica? Great entry. We bounced off the area. We're headed short. Do me a favor. Take your stop, put it 2 ticks above there. Don't hope, don't wish, don't want, don't pray. Just move the stop and let's see what happens next, guys. And you're either going to get stopped out for a smaller loss. It stings a little less, or it's going to hit target 1. Target 1 for the KISS plan is $100 from your entry. That's it, just $100. We're not looking for a $10,000 run. We're not looking to make a bajillion dollars, guys. We're looking for $100 on that first contract. We are cementing the idea that confidence comes from the memory of success. $100 is success. Your sweaty palms begin to dry up, guys. Your butterflies are no longer in your stomach. That pleat that you just sucked into your chair starts to relax a little bit. You just got paid. And then you're going to move your stop to break even. And you're going to say, you know what? They might get me break even. Who cares? It doesn't sting. Or it's going to go to your second target. And once again, I want you to sit on your hands and let it play out. I want you to put yourself in a position where you're learning to trust the idea that the large chart leads the way. That the only reason you took this trade in the first place was because of odds favorable momentum and a clear path. And let's trust the large chart to take us to our second target. And the second target in the KISS plan is $200 away from your entry. That's it. And this is your exit. You're out of the trade. Not doing anything else. Whatever happens next doesn't matter, guys. But if you enter where the market is most likely to continue, If it goes to your second target, it's a $300 winner. And again, some of you are like, Mark, I need to make more than $300. Guys, this is one trade. This is 4 minutes of your life, maybe, of active work. And $300, if that's the best you do every day, is a $75,000 year. That's not so bad. Throw a break even in there, and you're 6 figures. And in the beginning, learn to get paid, guys. Learn to take profits. Learn to get out at those key areas. Learn to not hope. Keep it very, very pragmatic. Keep it very, very mechanical, guys. And then you will craft a plan tailored to your personal goals based on your experience reading the indicators. You will begin to hold for bigger moves. You will find different ways to manage out of a trade. In the beginning, keep it mechanical. Here's some ideas that lets you say, well, when to hold. Let's see what it looks like. When everything says down, when the path is clear, when the triggers are the strongest, maybe a quick exit isn't your best opportunity. Maybe there's a lot of money to be made all the way down to that fib. So what happens is as you grow with the software and you gain a little confidence, guys, you start finding opportunities to hold for bigger moves. You start finding opportunities to get out maybe a little sooner. But in the beginning, keep it very, very mechanical. And then once you practice this a little bit, once you start to feel confident, once you're winning more than you're losing, you're going to want to go live. You're going to want to test your ability to trade in a real scenario, guys. And there's 2 things that you have to understand. You have to understand why you'll enter a trade. Initially, that's the entry rules for the highest probability trend trades, that KISS plan. And you have to know why you will exit. And until you create an awesome plan, it's okay to use the KISS plan rules, guys. But commit to having the rules met. Because rules are created from patterns that repeat themselves, that win more than they lose. So rule number 1 is in play because over the course of 28 years of teaching people to day trade, the one thing that we found to be true is that momentum says that the odds are favorable for the market to continue in the direction of the trend. That is an advantage. And more often it pushes than doesn't. So it became a rule. More often than not, when you hit an area and the triggers remain above or below it, it stops the market or creates an untradeable bounce. It doesn't do it all the time, but it does it with such frequency that rule number 2 is created. And the same is true on rule 3, guys. The rules have been proven. And the more consistent you are in action, the more consistent in profits you'll likely become. Your process yields the results, guys. Your great swing creates low golf scores. Your ability to shoot a free throw is what has you hitting free throws, right? It's not your desire to win, but rather the process, guys. And the rules, because they've been proven to win more than they lose, they help reduce the emotion. True quote from my brother this morning. I've got 3 points of risk on this trade. I don't care what happens. I have my advantages. And he'll use the phrase, they have to come get me, because he knows exactly where the market is likely to not go. Sorry, that is hard to say. So guys, if I'm in a high probability trend trade, what's it going to take to get me out? And this sheet's called exit conditions. Initially, it's the KISS plan. That's it. You're learning to read your indicators. You will grow into other scenarios, reasons to exit. If you take one of those 50-50 trades, not only is it different rules to get in, but it's also different rules to get out. So you've got to know the rules for both. And you've got to be able to execute them without question. If you add a momentum trade, that's a 3rd set of rules and a 3rd set of management. And then if you throw in one of those HVA trades, guys, you're up to like 20 different rules scattered over 2 to 3 charts. And it will get confusing for the new users. So keep it very, very focused in the beginning. Keep it very deliberate. High probability trend trade. Let that take you to the 50-50 trade. Let that take you to the momentum trade. Let that take you to the HVA trade, guys. So I just dropped my trade tracking sheet in there one more time. I want to make sure that everybody has it. And then I'm going to give you the chart reading 101. I'm going to give you the high probability trend trade checklist. I'm giving you the KISS plan. I'm giving you the daily goals that shows you how much you need to make based on 252 trading days. I'm giving you the one that says exit conditions, that gives you ideas to start working on management. And I gave you my PowerPoint in PDF form so that you have access to every picture that I use. Yellen's going to start yelling in a minute, so we're almost there. So guys, when I tell you I'm going to give you everything you need to be successful, you've got it. 100%. You've got everything that you need. Did I give you every trade that Nexgen teaches? No. Did I give you every trade that's possible? Absolutely not. But what I gave you is a rock solid foundation to learn how to read the indicators, to learn how to win more than you lose, and to find that level of success that creates confidence, guys. And every day I say it, the only thing that I did not give you, the only thing that you don't have is experience. So experience comes through taking pictures, through taking trades, through annotating charts, through study, through simulation, through class feedback, guys. And the more you do, the more work you put into this, the quicker you'll get to where you want to be. So you have everything. I won't beg you to participate. I won't beg you to study, guys, but I will tell you that the people that put the most into this get the most out of it. Are there any questions about a high probability trend trade? Are there any questions about any one of the three rules? Pretty good? Cool. So I'm going to take 5 minutes, guys. When I come back, we're going to look at every chart that's been posted. We're going to talk about these three things: momentum, clear path, and entry. If we see reasons to do it better, ways to do it better, ways to avoid problems, we're going to talk about them. Once you submit your chart in class, guys, it opens the door for lessons. I may take your chart, Gino. I may take your chart, Jay, and I might turn it into a lesson that you don't need. Don't freak out if I do that. If you take an entry that gives me the opportunity to give a whole lesson on better entries, don't get freaked out about it, guys. I'm taking your pictures and we're turning it into education. So look at this. Do we have momentum? Well, here comes news. Absolutely we do, right? Small's above the large, larger wide. Does everybody see it? But price reached a divergence high and the triggers remain below, guys. I don't have a clear path. So what do? I have momentum. I don't have a clear path, guys. I've only got half of my large chart advantages. It might go up, but the likelihood is there that this could create a bounce or even a potential reversal. So I'm going to sit on my hands and do nothing. You do whatever you feels best for you. I'll see you guys in 5 minutes. All right, y'all, let's get back at it. Termination condition worked, didn't it? Even with odds favorable momentum. Does everybody see it? And guys, this is one of the reasons that we talk about termination conditions so much. This is one of the reasons that rule number 2 becomes so important. Because momentum is awesome, guys. Even coming from a termination that reverses the market, but having a respect for these lines that can stop the market and understanding that line was there for 30 minutes before it was reached. Guys, you know where the market is likely to go. You know where it's likely to stop. And this is one of the biggest advantages that the software gives you, is you can literally say to yourself, hold on. My triggers are nowhere near that line. Let me pause. Let me wait for a second. Let me not hope that it goes up. Let me not talk myself into something. Let me not give away my money when there's no reason to give it away. And I hope that makes sense to you guys. I'm going to scroll up to the top of the room and we're going to start looking at the pictures that you guys have posted. It is the Jen show at 5:06 a.m. And we're going to see what's going on in the wonderful world of Jen. Odds favorable momentum from a strong bottom. Everything says up. And Jen, I am pleased as punch, as they say in the South, to see you enter at the area right there at the trigger lines. Your stop was appropriate. You held on at the area inside. You still held on at the area inside because look, 2 divergences don't freak us out. And you take money at the trouble spot. Jen, this is brilliant. Everything about it's beautiful. 100% rules based. And I see no waiting for the reversal bar. Unless it's appropriate, right? Unless you need that little bit of confirmation. That is just absolutely beautiful. 50-50, perfect entry, virtually no risk. Out at trouble. Second divergence prints, you take an exit. Jen, virtual high five across the pond. Nice job. Isn't this better? Doesn't it feel better to have less risk on a trade and more room back to trouble? Good job. And guys, this is what we do every day, is we just talk every day. Loss of momentum, smalls turned red, 2 divergences, wrong side of the triggers. Just nothing to do yet, right? Jen, you just said, ugh, that's not my trade. I'm making money on the easy ones. If it's going to go up, things will break. What a great job. Thank you for that. Thanks for posting those. One of my favorite things about teaching is it's not the repetition of the lessons, guys. I could go through my spiel in my sleep. It's seeing y'all take the lessons that we talk about in the room. It's seeing you guys posting charts and me saying, hey, guess what? Here's a way maybe where we can reduce risk or maybe increase profit. And then you guys come back the next day and you start using these lessons and you start trading a little more effectively, a little more efficiently, a little more profitably. Guys, it's like proud daddy moments. It really is. Ron says he opened the chart to see this. Price had cleared trouble. Sorta. And he goes, pa-pow. Quick 11 tick nibble before coffee. In the Simmon pool. Yep. I like to do that too, guys, until I've got a little coffee in me, until I've been awake for a few minutes. There's nothing wrong with starting your day on Sim, just to get the juices flowing, right? Yesterday I needed it horribly. Funny story. I have to share it because it cracked me up. Yesterday morning my coffee tasted horrible. It tasted different. I couldn't figure out what the problem was, but of course I still drank it because I needed my coffee. I put buttermilk in my coffee. Just a little example of how maybe you're not ready to trade straight out of the gates. It was horrible, Jen. And I made it through half of the cup before I finally stopped drinking it. It was bad. And I like that. By the time he gets the coffee, it's time for a little scotch in the tea. And guys, Ron's trade relies on momentum. Ron's trade relies on getting past these Fibonacci areas, and Ron's trade is very much about getting paid at the blue lines. And this is kind of where you're headed if you're brand new. Being able to recognize opportunities outside of that high probability trend trade, being able to capitalize on those opportunities outside of the high probability trend trade. Gary's been with us for a while, and Gary's such a great chart reader. And look at this. Gary says, here's a termination. And that termination, along with two divergences and a little trigger roll, I'm going to incorporate a third chart. And I'm going to incorporate a pattern that gives me the opportunity to take advantage of that reversal coming off of the Fibonacci area. And man, Gary, you did it great and out at trouble. Just beautiful. Wayne, this is kind of what you've been doing too. Gary, rock star. And then Joel, we saw yours too, right? Everything says up. The strength is amazing. And with this much momentum, you say, let me get to the business side of that fib. And let me get out when we hit the next fib. Another great trade. Guys, we haven't seen... He already did, Hong. But Hong, this is not a high probability trend trade. This is a termination condition, rule number 2. This is a rolling of the triggers, letting him know that now the momentum on the small chart is going up. And he just jumps in. He just jumps in, but it's based on a pattern from a third chart. And Hong, I'm not going to annotate it because I don't think that there's any value in it for a brand new user, because this is an advanced trade. This is a trade that requires 3 charts and different rules and an understanding of a lot of things going into play. But basically what it is, he has momentum on this chart, he has momentum on this chart, and he couples that with the termination on this chart to find a way to get that bounce back up to the mid band, back up to the fib. So it's 100% chart reading. There's a set of rules that go with it, but it's a little more advanced. Especially if you're trying to figure things out. Recognizing that there's a place to go is awesome, but trying to figure it out before you're in your spot, it's going to create some confusion for you. Because his entry, and let me do this for you real quick. His entry, where did it go? Looks like the spot for a trend trade short, doesn't it? Odds favorable. Doesn't that just look like a short trade to you as a brand new user? No, it's okay. But it's this Fibonacci line that changes the entire dynamic. So Hong, you know not to trade into the line because you're working on that high probability trend trade. Gary knows it so well that if he can't go short, he's finding opportunities to go long, and I promise you, you're going to get there. But let's focus on the easy ones first. Gary, great trade if you're listening. And then Hong, it won't be long. And that rhymes, so you know it's true. All right, Pete says he did this yesterday. Let's see what Pete did. Not the greatest large chart. The trend was down, not odds favorable, but had momentum. He means one line was outside, trading directly into the termination, Pete. 100% directly into a termination without a lot of momentum. Pete says, I don't know if the mid-band's going to hold. I'm willing to take a shot because of this trend, and it paid off nicely. And this is where I'm gonna say, this is where I become a little bit of an old fuddy-duddy. Guys, without momentum directly into a termination condition, that's a tough trade. Just let it get to the other side of trouble. Instead of trading directly into the area that can create a bounce, why not trade from the area? Just a thought. And again, I don't give trading advice, but this is one of the things that I see a lot, because this same trade taken right here bounces. I know, but you know I'm going to say it, right? Because it's a teaching class. And guys, just because I point out a challenge that I see on your chart doesn't mean that I hate your trade. It just means that everybody's learning. So why not point out everything, right? Price chart clears trouble, clear path. Momentum is down, oh my gosh. Clear trouble, Easy money. Nicely done, Ron. That clear path pays dividends for a lot of people. Jen, everything says down, back a price clears trouble. You get in, you get out. Absolutely beautiful. Same trade. Different time zones. But the advantages are the same. Yeah, Pete. It's... Brr. So one of those things, and Pete, man, please don't take offense by this. When people go, yeah, I know I traded into a termination condition, but I won, right? I broke my rules, but I won. Pete's at a different level than most of you guys. And what happens is, Pete, some people could argue that you got a little lucky trading into a termination condition with weak triggers. I could make that argument. If I went back and I took 100 pictures of weak triggers at a fib, more often than not it's going to bounce, right? And new users will say, yeah, but I made $360. Pete says, Mark, my plan is so stinking solid that every now and then I can justify going outside of the rules. I make so much money on the good trades that every now and then I'm willing to trade the probabilities, guys. And that's experience. So Pete, I'm throwing you props right now. This is experience taking this trade. For the new user, you're kind of going outside of the advantages. And then Gino, on the NASDAQ, we use the small triggers on that 13.2 to talk about entries. But there's not a rule about it. It's just using those small triggers for entry. And then Pete, you had super low risk. And again, that's experience coming through. Gino, it does tend to retrace, but it doesn't necessarily stop, so there's no rules in place. But on the NASDAQ, when those small triggers are a full bar away, it just gives you room to manage. Because the small triggers on the 13.2 on the NASDAQ, Gino, can be a bounce point, if that makes sense. Cool. Strong bottom, 50-50, no divergence, perfect entry, making money. Jen, beautiful. Gino, it's nice to see you in here too. It's been a while. Guys, everything starts with momentum. When you understand that it's not a clear path, it makes you manage a little bit, which means she takes the perfect entry with the lowest risk. And when she gets back to that divergence high, right up, she's like, you know what? Let me get paid. I don't have to hit a home run every time. Let me collect some money, pour some tea, wait for the next trade. Absolutely wonderful trading, Jen. Does it help buying at the area? It does, doesn't it? But it's nerve-wracking. If you're brand new, guys, it is nerve-wracking going long when the market's coming down. It's nerve-wracking going short when the market's going up. And that's where repetition creates a little trust. And then again, yeah, Jen, that's where posting in the room, right? You didn't post the crap. There were still great trades. They just could have been better. And I like you guys enough to try to make it better. Morgan, good bottom, 50-50, great entry, quick profits. I mean, rock star. No divergence is the best look. You and Jen are in cahoots. Let's see. Morgan got in at 47. Jen took 45. Jen's like, you know what? Anything boys can do, I can do better. Nicely done, Jen. Both of you guys, outstanding trades. Paul Flowers. Termination. Strong top, absolutely. So, Mr. Flowers, Got some good lessons in this one. When is the mid-band a termination condition, guys? Let's talk about that. When is the mid-band going to behave as a termination condition? Let's go to the rules real quick. You've been practicing, Gino? I like it. The mid-band is a termination condition. That's for entries, Hong. But on the large chart, the mid-band will behave as a termination condition if the large triggers are a full bar away. So those large triggers have to be off in the distance, kind of like they were right here, because price returns to large triggers. See if we can find a good example of it. Bum, 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 bum. Mid-band gets hit. No, not quite. There we go. Right at the mid-band, large triggers a full bar away. So when I've got this giant space between price and the large triggers, that's where we start to get the mid-band. Paul, you actually had momentum and a clear path. Does that make sense? Are you still in here? Because your large triggers are so far below this reversal bar marker, it is not only momentum, but it's also a clear path, and it's coming from a strong top. This is the highest probability look that you could take for a trend trade. Does everybody see it? Because that's what's important. Yikes, Gary. Okay, so not Mr. Flowers. You guys that are brand new, do you see the momentum in this trade? And since the large triggers are not a full bar away, the path is clear. Rules 1 and 2 are met 100%. Here's your pullback. There's your only line at triggers. Guys, the correct entry for this trade would have been just below resistance inside of triggers. The correct stop would have been just above. So we sacrificed 2.5 points, 2 points here. We increased our risk and decreased profit potential. And you put the second target at Fibonacci support, but I can't for the life of me. It didn't get there. So what happened here, the yellow line up here, right here, these are 1-to-1s. I don't see any yellow lines lower. Will you take a picture of my screen and draw an arrow on it? 56.95, 91, 92, 93, 94, 95, 90. Oh, right there. I got you. That's the reversal bar marker, Hong. This tells me where this bar will become an up bar. The same way it tells me where this bar will become an up bar. So, Hong, that's how I knew that the triggers weren't, or that the mid-band wasn't a termination condition. Because if it takes this much space to create a reversal bar and my triggers are below it, they're less than a full bar away. So guys, this is a high probability trend trade where a great entry gets you in at 93. First profits come off, I don't know, around 92. $300 is made at 90. Instead, we pulled off about $65, $75 a contract. And guys, this is where understanding your rules pays dividends. And Paul, I apologize if it feels like I'm beating you up. When the large chart is perfect, guys, waited for a pullback to enter the trade, rollback bar. I don't know what rollback bar means. Note, mid-band was between large triggers. It's inside of the large triggers. Stop goes 4 or 5 ticks above the synthetic. Yeah, I'm not sure. I'm just not sure how this one played out live. Mr. Flowers. But this is an example of where being confident in the read and knowing that nothing's wrong gets you in at the area, reduces risk, maximizes profit potential. Wayne, strong bottom, odds favorable, room to make profit before the fibs. There's that white bar. You missed the entry, that's okay. And then as it comes back, you get into the perfect trade. And you held it just a little bit long. You were trailing stop for smaller profit. Set limit entry above the midband. Perfect entry. A lot of people took this trade, but it's only 50-50. It's just the potential to break. And since it's only the potential to break, get paid on that mofo. Nice job. It's a great trade. I think there was an opportunity to make a little extra money on that one, though. When you have to say that it's a medium probability, it's okay to get paid, guys. It's okay to take profits. All right, Hong, let's answer all your questions. I love that you take pictures and post questions, by the way. All right, small triggers, above large triggers, wide space, scissors open, rule 1 met. Absolutely perfect. Why would I take this trade? The small triggered is above downward trend and the large trigger's going up, maybe past fib term. All right, so Hong, great question. So let's do this. You said that your large chart has odds favorable momentum, right? I love this picture. So the large chart defines, let's use that word, trend. The trend is up, right, Hong? Large chart is green. Momentum, you have odds favorable momentum, so the large chart is giving you the direction and you have the best trigger look you could ever hope for. And then it also defines areas. And your areas have the potential to break with that momentum. Is that how you read it on the large chart? Perfect. So on the small chart, where in your rules does it say that the small triggers can't turn against you? Do you have anything in your rules that says if the small triggers turn against you, don't take the trade? I've never taught it. So I want to make sure, because these are the things that begin to distract us from the entries. There's nothing that says that areas on the small chart are problematic. All of this is defined on the large chart, Hong. Your job is to understand that this is the most likely point for a bounce. A dangerous word. If you avoid trades because of maybe, then you will never enter the market, Hong. Because you will never know what the market's going to do. You will never know if this trade's going to win. You will never know if this trade's going to lose. You will never know if that area will create a bounce. You will never know. And I promise you that, guys. You will never be able to predict what the market is going to do. But here's the great thing. The market has a memory. It repeats itself over and over. You know a pattern that wins more than it loses. Trust the pattern. Don't worry about the result. Because if it wins more than it loses, the results will be good long term. I don't even worry about it. For a high probability trend trade, Hong, I don't worry about it. Let me say that. For a high probability trend trade, I couldn't care less. With the potential to break, one thing that you'll see in the KISS plan is that you need to have separation, right? But it's this little pushback. It's that loss of momentum. And this will be good. I'm going to go to the to my spreadsheet real quick. And I want you to see something kind of cool. This is the perfect look, right? That's beautiful. The small triggers give me just enough loss of momentum to get back to the perfect entry. Once again, great momentum. This looks exactly like your picture. The small triggers turned against it. This is why I think studying that spreadsheet is pretty cool. Let's do another one. Small triggers turned against this one. Small triggers turned against this one. So this is, I mean, what a great question, Hong. It's so easy to get distracted by all of the noise on the charts, guys. It's so easy to create scenarios of why your trades won't win. It's so easy to get so wrapped up in things that honestly aren't important. And these small triggers, that little loss of momentum is exactly what I needed to get back to my perfect entry. Does that make sense? And that's why momentum is defined on the large chart. Because when this big slow chart says we are cranking to the upside, this is just an X-ray. You guys good with that? Whoops. Trying to see if there was an entry here. Bum, bum, bum. So at 10:31, we pulled right back to resistance inside of triggers. That was your first shot. Divergence prints on the 50-50. It still pulls back to resistance inside of favorable large triggers. And now we're two divergences. And we caught the one-to-one. So great question. Awesome question. Don't let the small chart talk you out of large chart advantages. All right, let's see this one. Rules 1 met. Hold on. Is this you, Hong? Okay, so this is somebody else's chart, right? And you're annotating someone else's chart here? So from 69 to 63, 10 ticks is 125 on the ES, so that's a yes for sure. Okay, so I want to do this. Bum, 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 bum. I want you to look at those triggers for me. Okay, these triggers were defined as odds favorable. And now I'm going to go back real quick and I'm going to open up the picture that I use every day to teach. And it says that there has to be a separation between the small and the large. That it's the space between the two that gives me that odds favorable momentum. So guys, help me out with this one real quick. Do I have odds favorable momentum? My small triggers are inside of the large triggers. Nope, not at all. Great. Guys, this is where annotation pays dividends. But both small and large are above the problem area, right? So I do have a clear path. And then what does rule number 3 say? Rule number 3 says, wait for a pullback inside of favorable large triggers. And I don't feel like it's a bother. I don't feel like it's a bother at all. If you just jumped into the market here That's fine. You can do it. And getting out below the termination, that's a great way to do it, Hong, right? Everything says up, every trigger is up, everything is clear to get to resistance, and you're looking for a little snippet. You're looking for a little base hit. I have no problem with that trade at all. Is it a high probability trend trade? Of course not. There's no pullback to areas inside of favorable large triggers. And Hong, what you're looking to take here is what we call a momentum style trade. You're looking to capitalize 100% on the strength of the push. Does that make sense? So the stronger these triggers, the more likely these trades are to work. When it's anything can happen, you're giving up a little bit of advantage on taking a trade that is dependent on momentum. But I love it. Clear trouble, room to profit, and you're just looking to capture a little bit, which means that you're already taking those ideas and formulating another way to make money with them. That's the stuff that I get excited about. Nicely done. I hope that all made sense. Strong top, we're about a tick off. We can do that. These are areas. Large triggers above the small triggers. Smalls are below, right? Here we have a 50-50. Absolutely perfect read. Is this a fib? Sure is. So we're still 50-50. And what happened is when this support became resistance, resistance dropped down a little bit. You are 50-50 with the greatest momentum ever. You enter just below the 1-to-1. You put the stop. Should be 4 to 5 ticks above the synthetics. Very nice. First target, 1 tick below entry. Eee. Second target, 2 ticks below first target. Eventually, you move the stop to the end of the reversal bar. Window of opportunity is within the favorable large triggers. Amen. Anything outside of the favorable large triggers is not an issue. There can be a bounce at the term mid-band fib or 1-to-1. Right, so anything outside of the favorable large triggers is an issue, where the market shouldn't go, right? Hong, you absolutely nailed this trade, 100%. What gets me, though, you said that your first target was a tick below entry. So you made $12.50 on your first target? And this may just be definition stuff. So let's do it KISS plan. Can we do it KISS plan? If I enter at the area inside of favorable large triggers, absolutely perfect entry. My initial stop is 4 or 5 ticks above the trigger lines. That's the first one, initial stop. Targets for the KISS plan, if you're in at 85, 83 right here is $100, and then 81 is $200. Are you with me so far? This is the KISS plan. It says your first target is 100, your second target is 200. Once you get the reversal bar home, your stop is 2 ticks above the reversal bar. And honestly, you are out of this trade and just watched all of this happen if you were on the KISS plan. So 100 and 200, perfect entry. Stop where the market shouldn't go, absolutely beautiful. Let's reduce risk once it starts to go our direction. Get paid, and then Hong, when you get more comfortable and you start to delve outside of that KISS plan, getting paid at that area is outstanding. And you turn this $300 trade into like a $500 or $600 trade. But you did this perfect. Great entries create manageable trades. I love everything about this picture. Outstanding work. All right, the Steve Diego show. Couple charts from yesterday. I love it when you guys give me 4. Moving so fast, 3 seconds from clear trouble to entry after entry, 1 second target. Where did you get in? 74. So you got into the fib. And you got out all the way kind of halfway through, right? Quick money, Steve. Sometimes it goes so fast that it looks weird. You probably tried to get in up here and it got you in right here. And you made those profits. Is that what happened? Because I took one of those yesterday. And it was so funny. I showed my brother. Hell, it might have been the same trade. Let me see if I can find it. The difference between where I wanted to enter and where I actually got filled, it looked ridiculous. My intended fill and my actual fill. That's how fast the market was moving. It looks almost exactly like your trade. And everyone in this room should be going, but Mark, you traded into an area, you yahoo. Man, I tried to enter this trade all the way up here, and it was moving so fast. That's where I got filled. No, just NASDAQ, C-Dub. Just NASDAQ. It was flying. Buy now. Or sell now, Pete. I hit sell now as soon as my rules were met, and it was 12 bars before I got filled. That's how quickly it went. And by the time I realized where I got filled, I was already out of the trade. It was probably less than a second. All right, let's see. Everything's going up. And you jump in. Man, that's a tough one. I'm trying to figure this out. So you jumped in short with no momentum and got stopped out. And then you bought at 83, which means you had 12 ticks to get. And you, very nice. And then when it turned into a momentum trade before it hit trouble, you added on again. I love that, Steve. And then the only question, man, is why the hell did you hold that one? Why did you turn the perfect trade right to the area? I sure will, huh? You were in at 70, and you lost both of those contracts at 47. That was another trade. 2 in, 2 in. Oh, you tried to go short with everything up. Right into the area. Yeah, without momentum. I see. I see. Where are your small triggers? Where are your small triggers, Steve? Did you take them off on purpose? You don't have any there. Did you have them on this one? No. They're buried behind? Okay. Are you sure? I love this one. Everything says down, clear trouble, easy money. Momentum, clear path, giddy up, get paid. I like that one. I'm not seeing, there's small triggers. I see them now. Everything says up. You let the back end clear. You hop in. You get paid. Great job, dude. Consistent, Steve. Really consistent, man. Appreciate those charts. Once you know what you're looking for, it gets pretty easy to find. Kurt. Okay, we got arrows everywhere. Let me figure out which trade you're talking about. Odds favorable. This was a clear path here, but you're talking about going this way. So we've got favorable large triggers, but a 50-50. Smalls outside. No divergence. Not from a strong bottom, so you didn't take the 50-50. May or may not have gotten stopped out. Came 5 ticks from the synthetic. And then heading up. Yeah, so you're 50-50 right here. And this is kind of a big deal. Yeah, good observation. I like this because check it out. You've got 1, 2, 3 areas that you're hoping break, and it is a 15-point range. That's a lot of hope, right, for triggers? That's a big range that you're hoping that the momentum carries. I like that you held off on this one. And this is one of those ones, Kurt, where you can say, if I'm going to take this trade, I'll insist on a reversal bar. At least then I've got risk. Because look at how high above everything these triggers are. So, man, yeah, I like it. And I think it's a great observation. And I think that when you guys go through and talk about the whys, it makes it easier for sure. Yeah, Morgan, I'll do that right after we do Hong's lesson on pivot stop outs. In Hong, I'm just going to go straight to the rules for this one. And then I'm going to give you guys something too, because I wrote a little thing on it. So a pivot stop out. When I say points, so if I say on the S&P, you made 1 point. You made $50 on the S&P. If I say you made 1 point on crude oil, you made $100 on crude oil. So I'm not really talking about the scale. I'm rather talking about the price movement. Does that make sense? So on the S&P, there are 4 ticks in a point, which means each tick, that smallest amount of movement, is $12.50. And on crude oil, each tick is $10. And it takes 4 points on the S&P, or 4 ticks to create a point on the S&P. It takes 10 ticks on crude oil to create a point. So I'm talking about the actual monetary. 1 point is the distance is 4 ticks. 4 tiny movements to create 1 point. Does that make sense? Cool. All right, so let's talk about pivot stop outs real quick. And there's a couple things that go into it. And I've also got... I'm going to drop this one in the room for you. I wrote these little blog things. I haven't done anything with them, but I wrote them. Let's do this. So, and this is one of the biggest misunderstandings with termination conditions, is when you have a pivot with a loss of momentum compared to a pivot stop out. So let's run through each of them and piece it together, guys. First, we have a pivot. And a pivot is nothing more than where the market goes up and then down, or the market goes down and then up. Is everybody good with that? This is a pivot. It's a V. It's a point. It's one part of a triangle. If the momentum of the market doesn't follow price, that's when we get that divergence. So a pivot that doesn't have a loss of momentum doesn't have a line. But if the market goes up and then down and there's a loss of momentum, you're going to see that magenta line from a high or that cyan line from a low. And divergence is just a loss of momentum, guys. Don't give it any value but beyond that. So far, so good. First, we have a pivot. Now we have a pivot with a loss of momentum. And that's all it is. It's just a loss of momentum. This isn't a game changer. But then we use the idea of termination conditions with these. So when price returns to a divergence high or low, trades beyond it, and then changes direction, this is when you have a pivot stop out. So first you have to have a pivot with a loss of momentum. When price returns to it and trades above and then back below, this is a pivot stop out, Hong. So here's your pivot and here's the stop out. So the buyers tried to push it up and the sellers stole their momentum and pushed down. They created a line in the sand. The buyer said, dude, we're not done. And they push right back up to that key area. And the sellers say, hey, watch this. It'll be freaking hilarious. Let's let them get 2, 3, 4, 5 ticks above that line and make them think that they're home free. And then let's just stomp them. So once price trades back below, we have to believe that the sellers are there to ruin their good time. And there's absolutely no more trades into that area. Pivot stop outs are termination conditions. And when they happen at key Fibonacci areas, they're even more powerful. But here we get the divergence low. The buyers try to push up. And when they come back and reach the line, it's a termination condition. When they trade below and then back above, it's a pivot stop out. Does that help a little bit, Hong? So anytime I say pivot stop out, there is a beautiful example. First, we have a pivot with a loss of momentum. The sellers put the line in the sand and they taunt the buyers. Buyers, I dare you. Because right here, we told you that we're going to screw it up for you. Right here, we're going to unload on you. And that's exactly what they do. So when price goes above and back below, absolutely no long trades. There it is again, right at key Fibonacci. And look at this. The buyers were in control all morning. There's the pivot where the sellers stole their momentum. And the buyer said, no. We were looking for that fib. John Novak created these fibs. You know we want to get to that fib. They make it. The seller said, no, we told you we're done. And look what happened off that pivot stop out right at the key Fibonacci area. Pretty cool, right? So these divergences on their own, who cares? Not worried about them. It's just a loss of momentum. But it becomes a line in the sand. And then when they come back to it, and this is such a misunderstood concept that I made this picture. Anytime the market has a divergence low or high, guys, that line represents a very specific point where not only the in control force, that the buyers are going up or the sellers are going down, not only could they not push any further, but the other side stole their momentum. And it is a line in the sand. And very often, they try to exceed it. And this is why it's in that termination category. What a great question, Hong. Good job. I love that one. That is the last ES slide. So now we're going down, right? This one, fibs, it all created a bounce. But now we have odds favorable. Now we only have the potential to break. We've had one divergence. I don't have market flow, Wayne. I don't even have a chart built for market flow. Show me the picture of yours. We'll talk about it. I don't even build a market flow chart for this classroom because it's typically so far beyond, but I'm comfortable with it. I understand it. I can teach it. I just require that you guys show me the picture. Show me your picture. And we'll talk about everything that I see. Cool? Is that fair? I hope that's fair. All right, Morgan, you want to look at other markets, right? Cool. So you have to open up NinjaTrader, obviously. Go to Workspaces and hit New down here. And then we're going to call this Morgan's YM. And now everything disappears. So I have Morgan's YM, but I need to populate it. So I'm going to go New, and I'm going to go Chart. And I'm going to pick whatever one I want. And if I don't have it up here, I'm going to go to Futures, and I'm going to look for YM, and I don't see it. So maybe I'll type in YM. I've got there it is, the Dow. I'm going to double click, and it's going to let me build a chart. So the first thing I need to do is I need to build a large chart, 13.2. Make sure tick replay's on, and click OK. And it's going to start building a 13.2 chart for me. And then I have to build my small chart. So same thing. Now it's going to be in my list. And I'm going to have to change this to 5.1. And I'm going to have to put that template in there so it knows what to build for me. And then I'm going to click OK, and it's going to build that 5.1. And boom, I've got a YM workspace. And then once it comes up, I'm going to save it so that I have it. And the YM is caught in between areas. Thanks, rule number 2. You define consolidation. And I'm not sure where you went sideways on it, Morgan. But that's really it. Just building workspaces looks just like that. And then I know that this is crazy. That's okay. So all of you guys, basically anyone in the room with testicles, the software user guide is your how-to. So let's see if we have building workspaces. Maybe we don't. We should. You know what? I don't see it. I need to have John add that in there. I don't see building workspaces. I may have gone over it. There's closing workspaces. Haha. Morgan, you just did me a huge favor. Thank you for that. Appreciate you. And then when you want to close it, you just close it. And I'll just leave that. I'll save that forever. So here's my SMP. So let's say hypothetically, I'm teaching a classroom. And one of the students says, hey, Mark, let's check out the market flow chart on that one. And I'm like, dude, Wayne, I don't have a market flow chart. Let's build one. So I'm going to go new chart. And I'm going to grab my SMP. And we need a market flow, right? So let's go find our template. 8 range, market flow, 2 fast trigger lines. I love that. But market flow isn't dynamic Rinko. So I'm going to go to a range bar. I know that it's a range chart, and I know that it's an 8 range chart. And then I click OK. And Wayne, where did you want to see? Up at the top at that pivot stop out? Did I lose him? Maybe he's in a trade. Okay. My 8 range isn't building very quick. There it is. So this is one of the easy things to do. Is here, let me make this big. Oh, it's still calculating. So once that's done calculating, it takes a second. I need to quit jacking with it. What I'll do, Wayne, is I'll go back and I'll put a circle or a box around that pivot stop out. There we go. So let me scroll back to it. You wanted the one at the very top, right? Right here? So let's take a look at it. So there's my pivot stop out on the large chart. What did it look like on the small chart? It was right here, and man, there were, look at all that nonsense, huh? Look at that fight on the small chart. Holy smokes. I don't want to get caught up in that. Thank goodness my rules weren't met. And then watch this, Wayne. Dollars to donuts. Right where this circle is, I bet you there was an HVA line on that market flow chart. Let's go see. Not quite. So there was your pivot stop out. And notice that on the way up to it, triggers up, flat triggers, and then there's that white bar trade that you like, but it isn't into a termination. There's that white bar on the way down. May have been an opportunity for you to get in somewhere in there. You still have Rinko on your market flow chart? No. So Wayne, to be honest with you, During all of that nonsense at the top, there wasn't a whole lot to do, man. And this is why market flow, guys, you can't let market flow lead the way. You can't let market flow be the reason for an entry. You have to let the other charts do that. Because if you're looking at this market flow chart, I want you to see something, and you're like, oh, you know what? There's an HVA line. I'm going to go long. This is a general lesson. I'm not picking on you. There's an HVA line. I'll go short. There's an HVA line. I'll go long. I'll add on, right? Oh, no, I just got stopped out. There's an HVA line. I'll go short. There's a market flow signal. I'll go long. No, wait, I'll go short. No, wait, I'll go long. No, I'll go short. Son of a gun. I better go long. No, I can't do that. Let me go short. And guys, this is very real for people that are working on the market flow. You were watching that time. It's garbage. It's absolute garbage on this chart. This chart said, hold on, don't go long. Don't go short, sit on your hands. And then once everything rolls over, you're probably going to find opportunities, whether it's momentum or something like that. So I don't think range chart gave you a whole lot to work with on that one, Wayne. It might have talked you into some bad decisions if you weren't kind of steadfast on your rules. I hope that makes sense, everybody. I'm not opposed to the market flow chart. I like it very much. I think that there's a lot of great information. I actually told my brother this morning, so you guys that are trying to incorporate it, guys, it is, what is it Ron calls it? Ron's like, looks like river buoys, right? That's hard to read. There's a lot of information on there. But I told my brother this morning, I said, you know what I think would be a good idea, John? Is don't teach people how to enter with this chart. Don't teach people to take entries on this chart unless it's an HVA trade. Teach people how to use these areas on a chart for management. And I think that would be more beneficial to people because it's going to embrace the ideas. Right now, I don't have strong triggers. Right now, I don't have, I mean, gosh, rule number one's not met. So if you took the short, oh, that probably wasn't it. Here we go. Midband holds here, 1, 2, 3, 4 divergences, nothing inside, and it's going up. And I like that, Wayne. And I think using it for management is great. That strong trigger line, that one up, one down, man, let the Renko charts get you in. And then market flow creates huge advantages for management once you're in. That's the talk John and I were having this morning. Is one of the things that my brother is so good at is managing trades. Is taking trades, weighing out the advantages and the disadvantages, choosing to take an entry, and then being very, very diligent with his management based on what he reads on the other charts. So, yeah, I like it. And Wayne, I'm not worried about you. You're finding your way. You are definitely finding your way. And then Morgan, if you need help with that, building charts later, like if it doesn't work a second time, let me know. We'll get you taken care of. Good stuff, guys. Good stuff. Price reaches the mid-band. Large triggers are all the way down here by that reversal bar marker. I'm not coming from a strong bottom. Let's see if they pull back to the large triggers. I'm going to put a circle there. And I'm going to go take 5 minutes, guys. And when I come back, it's the last hour. I want to answer all the questions that you have. And Morgan, I think in the actual, if you run the indicators, you've got RTY, gold, crude. I don't think Dow is in there. You want to know another way to do it? Hey, be good, Paul. Take care, man. So check this out, Morgan. I'm going to do this before I leave. So here's my workspace, right? S&P. I'm going to go save as. And I'm going to call it, give me a symbol, Morgan. What else do you want? That's not a symbol. You typed it into the room. RTY 6B. We'll do 6B. Dude, I have ES. I'll do it 6B, and I'm going to hit save. Okay? So now I'm actually on my 6B workspace, even though it looks like the ES. So I'm going to come into the symbol, Morgan, and I'm going to go 6B, British Pound Futures. And it's going to change it. And I'm going to go to my symbol here, and I'm going to go 6B. And now I've got a British Pound Futures chart. And look, it looks just like the other ones, doesn't it? Isn't that crazy? It looks exactly like the other charts. The patterns are the same, guys. Your software doesn't know what chart you're trading. So then all I'd have to do, Morgan, is take this one and make sure that I save it so that it's there. And then I'm good. And now I've got it. And you can do that with anything. So you could go through and you could literally just keep building them. And what I can also do, because I'm kind of a nice guy on Thursdays, is there's both of those workspaces for you in a zip file. Just save them over to your NinjaTrader 8 workspaces folder. And now you've got those two built. It's the Dow Jones, of course it does. I don't know what it looks like though. I don't know how it trades. I don't know if it's predictable. I don't know if the patterns work over and over. I don't know if it tends to overrun. So guys, anytime you go to a new market, make sure you do your due diligence. Get on market replay and see, does it have a tendency to overrun areas? Does it have a tendency to do whatever? It's just patterns. The patterns are the same, but markets very much have a memory. And the markets very much have like a temperament, if you will. Gold is like that girlfriend that you keep pissing off and she stabs you in the leg with forks. Please ignore first trade. Thought I was in the sell down, but it was in the buy. Stopped out at the time. I realized large chart still green. Just made a mistake. That happens. But here, everything says down. Momentum is good. You take a pullback to the area right inside of the triggers. Veronica, what is the only potential challenge on this chart? Do you see it? What's the one rule that isn't met here? And I'm not saying, is it rule 1, 2, or 3 that you let slip past? Perfect. Great trade. Beautiful trade. Strong top, odds favorable, beautiful entry creates a manageable trade, and you get out of trouble. Veronica, this is being able to read your charts, read the advantages, understand the challenge, and you believe that great entries create manageable trades. I love it. And I love your progress. And I love that you and Hong are a week in and you're already showing me great entries and you're already showing me that you understand these concepts. And for those of you that are brand new, this is a weekend. This is 7 days of just hearing the same darn thing over and over so that you can find an opportunity. Pretty cool. Nicely done, Veronica. Guys, I'm going to take that 5 minutes I told you about. Go stretch your legs. And when I come back, you're going to have about an hour to ask all the questions you want to ask. See you in just a minute. Let's do our current chart read on crude oil. Rule number 1. Do I have odds favorable momentum? What do you guys think? Absolutely. Rule number 2. Do I have a clear path? Not yet. Perfect, Jen. No trade, right? Ask, bid. Wayne. So the A is ask and the B is bid. Oops. And here is what they mean. Because I'm not going to lie to you, I don't know. Bid and ask, also known as bid and offer, is a two-way price quotation representing the highest price a buyer will pay for security and the lowest price the seller will take for it. The difference between bid and ask prices, or the spread, is a key indicator of the liquidity of the asset. In general, the smaller the spread, the better the liquidity. So the bid price, the price a buyer is willing to pay, is the first price in the pair. The ask price, or the price a seller is willing to accept, is the second. So the smaller the split. So this is 84 to 82. That's some pretty good liquidity there. That's like 1 or 2 ticks. So apparently that's a good thing. Let's see what it says on another market. I like it because I get to learn stuff when you guys learn stuff. Same thing, 1 tick on the S&P. Thanks for asking that. Squashing hands, Jen? So that's kind of cool. If nothing else, it lets you know that the market's got some giddy up to it, right? So let's look in the British one that we built for Morgan. That one's pretty close. I've never paid attention to them because they have nothing to do with the patterns that I trade. Don't trust the Brits, Morgan. Again, Wayne, I don't know, brother. I put the link to it to Investopedia there for you. I don't know. I don't even know what the spread of the market is. Sorry. Hold on, let's see if it uses the word spread. Yep. The difference between bid and ask prices, or the spread, is the key indicator. So yeah, it is the spread. I can say that with confidence, hoping Investopedia is right. One of the things about trading, guys, is there's things that you have to know to be good, right? You have to be able to recognize momentum. You got to have an understanding of that clear path. You've got to be able to look at a chart and say, whoa, that's not my best look. But all the things like ask and bid and stuff like that, it's not important. It doesn't have bearing on the patterns. And Wayne, I guess an analogy for you is you might have the best race car driver ever that doesn't know a spark plug from an oil filter, right? But he's still a phenomenal driver. And he doesn't have to know how the car works. He just has to know how it feels when it's right. Has more relevance in stock trading, Pete? Okay. Didn't know. And that's cool, guys. I learn lessons when you guys ask questions like that. And sometimes I'm afraid that my ignorance will scare you off. But I'm a big fan of keeping it simple. Big fan of keeping it simple. Big fan of not overthinking things. Of focusing on a couple advantages, figuring out how to get paid. That's it. Yeah, it seems to be super thin. It's like a tick. One of the reasons why futures is so nice, right? Split triggers. Odds favorable. No terminations, but my triggers are split. Some people wait for a reversal bar here. But a reversal bar doesn't give you a lot of room. It works. It works, Wayne. There's people that trade Apple and Tesla. There's people that are doing crypto. We have farmers that hedge soybean crops. Absolutely. The charts don't know what they're trading, but the patterns tend to be true. Here, let me send my brother a message and see if he'll build me one. All right, so let's do that. Veronica. So this goes back to the idea of split triggers, goes back to the idea that price may return to these triggers, right? On the small chart, price may come back to the large triggers. On the large chart, price may come back to the large triggers. So what happens, Veronica, is when the large and the synthetic split or break apart, you've got a range that becomes this large where price may return. Does that make sense? And that's one of the reasons that our initial stop placement is beyond the highest line of the triggers. Because even if price comes through, there's your only area, but price still might pull up to here. So if I jump in here, that's my risk. If I wait for a reversal bar and sell here, notice how it went up to the other triggers. That happens a lot. But because it's not perfect, I might say, give me a reversal bar to take this trade. And if it doesn't happen, I won't take the trade. And if it does happen, well then my risk is already established. And 89.50 represents $100. So since the trigger lines aren't perfect, maybe I wait for a little confirmation. It doesn't guarantee a win, but when there's that much indecision, I want the market to tell me it's going in the direction. Does that make sense, everybody? One of the great uses of the reversal bar when you have split triggers doesn't guarantee that this market's going to go down, but I do have momentum. I do have a clear path. Rule 3 was just kind of wonky. And then once you get it, 2 ticks above the reversal bar marker, and then you're just in a holding pattern, waiting to see if you get your target hit. So split is just a way of saying that your large and synthetic aren't one on top of the other, Veronica. Look at all the dancing that happens. I'm down 100, 75, 50, 25, 50. This will exhaust you guys if you watch this number. Rules were met. Entry was taken. Stop is right. Let's just sit on our hands and see what happens. You're literally witnessing the fight between buyers and sellers right now. Literally witnessing the fight between buyers and sellers. Every one of those ticks will cause pain if you think you know what's going to happen next. We've gone from up 50 to down 125, guys. And now we're just right back where it was. So let's see what happens. Let's see if momentum pushes it down or maybe if it goes up or hell, I don't know. How are we doing so far? What does the large chart say, guys? Which direction is the market trending? Anybody? It's trending down. Which direction is the momentum? The momentum is down, and its odds favorable. Did it bounce right off the mid-band? Did it go to those triggers? Yes. Did we confirm it with a reversal bar? Yes. It gets us in late. There's a price for confirmation, guys. But my large chart still says down. And in this trade, we have been down $100 and up $100. And it is an emotional roller coaster. And Ron, you have a fib right there. And you have a fib right where I bought. I don't. I've got a strong top because the termination reversed the market. I've got odds favorable momentum. I've got room to my target. Oh man, and it just hit it. It hit it and didn't fill, guys. It's okay. I'm just sticking with my rules. Ron, sorry, Rob. It tapped on my $200 and didn't fill me. Isn't that a pain in the butt? You guys notice I haven't moved my stop? My first target hasn't been hit. Too many ahead of me? What do you mean? Oh, there it is. Profitville. That was a pretty easy $200, wasn't it? Did the large chart ever say I should be worried? That's what I want you guys to get out of this. So Victoria, oh, here we go. Hold on. That idea of split triggers creates a little indecision. And that little bit of indecision had us waiting for confirmation. But the large chart still said go. The large chart still said, yep, let's do it. And it worked out just fine. Pretty cool, right, guys? It works. It absolutely works. You just have to learn how to work it. That's it. And then, guys, I'm going to do something real quick. I'm going to disconnect. Actually, I'm going to close down. Man, why do you have such a hard on for market flow? I don't have it. I closed it out. You show me, Wayne. Where's yours? Because that might have given you a market flow sign right there. There might have been an HVA, right? I don't have it. I just built it for the one example. I didn't think I closed it out, but I did. You're in the shower. This is weird. This just got really awkward. This may be a first. Jen, we already know what you're thinking. It doesn't look like it gave you anything, Wayne. Didn't need it. You didn't need market flow here. And it didn't help. Not at all. And now I got 3 divergence lines in the same location, so. Clean learning. Good thing we don't FaceTime. Amen. All right, guys, since there's no charts being posted real quick, I'm going to do something real fast. I'm going to build a stock chart. My brother just gave me a lot of workspaces, but I have to kill NinjaTrader real quick to do it and then reopen it. Yep, 3 divergences, party over. So let's see if I can't build a stock chart real quick and we'll look at it. How fun is that? All right, let me get the kinetic one up. And I probably just booted my brother off of his. Okay, and these are bigger charts. This is a daily chart and a 60-minute chart. And Wayne, this is Facebook. And price reaches resistance. Odds favorable momentum carries it all the way back to support, where it bounces up to resistance, where it comes back to support, where it's launching up into the distance. Pretty cool, right? That's Facebook. Let's see what Tesla's doing today. Right off of resistance, but a daily chart says that it may go to 64.82. Me too, Gary. So Wayne, this is Tesla stock. We're at an outer band, but we do have odds favorable. Little push down. 248, 238 probably represents a nice spot for a bounce and continuation up. They would be retesting the high. If you were looking to sell your stock, that would have been a nice line to do it at. If you were looking to buy stock, a pivot stop out right at support might have been a good place to get in. Or support. Called the bottom of the move. Isn't that awesome? So, guys, it doesn't matter. And this is a different look. That's a daily chart. Each bar is 1 day long here. But momentum is momentum, and the market continued down. And terminations are terminations, and the market bounced. So, learn the patterns. Learn the patterns. And you'll be absolutely floored at what you can accomplish. What do you guys want to talk about? Ron says, let's see what Ron did. Odds favorable momentum. Hate odds favorable momentum. Nothing in the way. And you just make money. Ron, I love it. And I appreciate it because you taught it to me. Can everybody see how that was odds favorable momentum and a clear path? And Ron jumped in and out for $110. Boom, boom. Do it on a 10 lot. That's $1,000. We learned it together. And guys, we're going to do this. So let me look. Miss Veronica, clearly it's all starting to come together. You showed me a great trade, Hong. I feel the same about you. Narayan, how are we doing today? Slowly but surely, things starting to click. I'm real honest with you guys. The first couple days is a little overwhelming. I know that it's a little overwhelming. But if you allow it to stay a little simple. Gus, how we doing? Who else is in here? There's no doubt in my mind anybody can do this. You just got to find your groove, guys. You got to find your mojo. You got to talk about advantages. We're into a mid band. Oh, let's take a picture real quick. When is the mid band a termination condition, guys? If price reaches the mid band and the large triggers are above that reversal bar marker, no short trades into the mid band. Whoops. So if price reaches the mid band and large triggers are a full bar away, mid band is a term. Man, that's awesome, C-Dub. That's hard to do. Yesterday morning, I tried to force 4 trades. I lost 4 trades. Yesterday afternoon, I went with the flow and made $1,000. Following rules, guys. I don't care who you are or how long you've been doing this. Everybody has the potential to break a rule. Everybody has the potential for a bad day. It's okay. It's all right to have a bad day. It's okay to have a moment of indiscretion. The key is that you go back, and if you lose a trade, instead of taking the next trade and revenge trading, it's usually a better option to stop, to take the picture, to annotate, to talk about the rules. And guys, if you broke a rule, then you get to have that conversation with yourself. Oh man, I just broke this rule. And what it does is it keeps you from taking that next trade because you're mad as hell that the market took your money, but it didn't. Usually we give the market our money. We give it our money when we say, you know what, I don't need momentum. Or I don't care that divergence is one of the biggest killers of the 50-50 trade. Do you see it, guys? But Mark, there was momentum. Why did I lose? You broke the rules. But Mark, it had the potential to break. Why didn't it? Because it was just potential. Guys, you buy me dinner, take me dancing, there's potential for a good night kiss. Not obligated, though. Don't have to do it. So, patterns. What do you guys want to talk about? We got a few minutes. A lot of you guys are coming up to that decision-making point in your demo, right? That's exciting. Guys, I hope you're going to stick it out with me. I hope you're going to stay with me. I hope you see the potential in what we do, and I hope you see the potential in yourself to do it. You're toast, going for a walk, not a bad deal. Guys, this is the greatest hammer, but if you don't learn how to swing it, it's going to be difficult to build things. This is the most high-tech elliptical that you can buy, but if I don't drag my fat ass onto it, I'm gonna stay overweight. It's just a part of it. You got to learn to use the tools, guys. My promise is that I'll be here with you to do it, that we'll get to exactly where you want to be. As long as you do your part, I'll do my part. Skepticism. Take that skepticism. Prove me wrong. I always used to think that my brother was so cocky. When he used to tell people, show me something better, I'll buy it. I was like, God, John, you sound like an ass. Don't do that. Nobody's ever shown him something better. And anyone that's done it, that says, hey, John, this is just as good. These guys are doing something great. My brother's bought it and analyzed it and put it through the ringers. And he still trades Nexgen. So, all right. We're getting to that point. Getting to that point. Let's do this. I want to do this. This is one of my favorite pictures. This is for you new users. Everybody gets on demo and says, this looks like fun. And then you realize that you're going to have to work a little bit, right? That's day one. You get on the demo before you come into this classroom and you're like, I'm going to be rich by the end of the week. And then you're like, oh shit, Mark says I have to learn things. And then you're like, I'm not sure what's going on. I don't have it completely, but I sure do see the potential. I'm going to stick with this. I'm going to try to find these trades. And then you believe that you are unstoppable. 30 days in, not one picture posted. You're like, I'm a rock star. And guys, this is where you get humbled. When you don't do the work on the front end, you get humbled. And this is my story right here, 100%. My name is Novak. I'm going to be able to do this. I don't have to study. I don't have to take pictures. I don't need feedback. And then you lose $5,000 over the course of 2 hours. And then you study, and then it works. So, Rob, how much time have you devoted to studying the look? How much effort have you put into learning it? Because that's all it is, man. Taking any trade. Any trade. All you have to do is learn it. All you have to do is practice it. All you have to do is study it. All you have to do is say to yourself, this is important to me. Let me put some effort into it. And then all of a sudden, I'll never break up with you, Rob. We're forever. Me and you. But how many times have you watched Ron C. put this picture in the room and stolen it so that you could study it? Right? How many times have you read the words on the chart? Have you looked at the picture? Have you said, oh my gosh, I can do this? And this isn't just for Rob. This is for everybody. So my father-in-law, Rob, had this amazing saying that he loved to throw out there all the time. Wish in one hand, shit in the other. Tell me which one fills up first, right? I wish I could do this. Who cares? I'm going to do this. Laird Hamilton used to tell people, everybody wants to be a big wave rider, but nobody will paddle out. Nobody will paddle out to those big waves because it's scary, because it's work, because it's hard. Ronnie Coleman, Mr. Universe, 8 times over. Everybody wants to be a bodybuilder. Don't nobody want to lift no damn heavy weights. Guys, the results come from the work that you put into it. So Rob, every time you see Ron post a chart, why the hell won't you steal it? Why won't you study it? Why won't you look at it? Do you know what I did for 30 days straight? Every time Ron posted a chart, I stole it. Every time he posted a chart, I grabbed it, I read the words. But you've got to understand odds favorable. You've got to understand clear path. And Ron, exactly. Don't take a trade because you saw someone else do it. Learn the high probability trend trade, figure it out, and then once you're good at the basics, you'll find your way to it. You really will. So let me give you something that'll help. You ready? You guys that want to take trades outside of the high probability trend trade, this is the exact same checklist that I used to create the KISS plan. 100%. Fill in the blanks. The first thing you have to do, Rob, is define your entry, right? So what has to happen to get in the market? I know that I have to have odds favorable momentum. That's for sure. And I know there's something about areas, hell, I don't know, right? Or it is. Is it a clear path? Is it a 50-50? Do the price bars have something to do with it? And guys, this is why when you try to take trades that other people show that you don't know what's going on, it's not a clear path as it's taught in the high probability trend trade. It typically is a 50-50, but it has a lot to do with the price bars. Price clears trouble on both charts. Well, how do I get into it? How much room do I have to make money? Where's my stop? Where's my target? So guys, these are questions that you have to answer on simulator through practice and build a plan. And then take pictures. Perfect longs, perfect shorts. And then what's the management? And then one of the things that I think that you should put into it is, what does it look like when the rules aren't met? What are the mistakes? What are going to be my stumble points? Where could my analysis go wrong? And guys, that's how you create a solid plan. So it's okay to want to do what other people are doing. I'll tell you guys right now, I read charts as well as my brother. I can look at a chart and I can pop off what it is almost instantly as well as John Novak. I can't trade like John Novak. John Novak sees things and reacts to things faster than I do because he's 25 years ahead of me. So I spent 2 years of my life trying to be John Novak and failing miserably. And it wasn't until I created my plan that I started finding success. So just a little heads up. But Rob, start stealing his pictures, right? Start posting your pictures. And don't tell me in your pictures, guys. One of the worst things that you can do in your pictures, and Rob, this isn't specific for you, but this is a very common thing. I see this all the time. Right? Got stopped out. Took a loser, lost money, got my ass kicked. I know, but I don't ever try to be mean. But guys, I want you to see something. What if you did this? And this will be the final lesson today. Hong, sorry, it's bad language. It's an acronym for fudge my life. My kids aren't far from being teenagers, so I remember that one. But what if you said odds favorable momentum, right? And what if you said 50-50? And you understood that this area wasn't broken. And I'm not having luck with numbers. And then what if you said rules say no trade with divergence on a 50-50. And then if you took this trade and you lost it, instead of focusing all of your energy on how angry you are at the market, you got rid of all of this nonsense that means nothing, and you said something clever like, why did that do that? All right, hold on. Broke rules, no trade with 50-50 and divergence. I'll remember this one for next time, right? Don't waste your energy being upset. Don't waste your energy being mad. Go through, read your charts, identify where you made your mistake. And if you're studying this tomorrow, don't you think if you wake up tomorrow, Veronica, and you say, man, I remember when I took this trade and I lost it, but I lost it because I broke those rules. I shouldn't have traded with divergence. Today, my focus is to make sure that I don't have divergence on 50-50 trades. How could you not be a better trader the next day? And that's the part that people don't do. This is the same one from this morning, Wayne. 50-50, no divergence, perfect entry, held just a little bit longer than you needed to. And Hong, I try not to swear, but every now and then I do. Sorry. I think this one was still on your clipboard, Wayne. Did you have a new one? Cool. Try again. That happens a lot. And guys, I'm going to shut down the video so that you